Good evening, friends. Today we shall try to analyze Nifty 50 and how Nifty 50 may perform tomorrow, which is the 1st of August. Hope all of you had a nice weekend. I had a great weekend and took a good amount of rest this weekend. So we start a new month. So this is the monthly chart that I wanted to show to you. So we have one green, one red, one green, one red, one green, one red, one green, two red, one green, three red, and then again one green. Let's look into the weekly pattern. So in the weekly pattern, I had one red, one green, one red, one green, one red, now two greens. Now based on these patterns, what can happen? Let's see. So here I plotted the monthly pattern, monthly past pattern, from October till July. So October there was one green, November one red, December one green, then two red, one green, and then three red, and July one green. Now, what can be the expectation? Now, these are all speculation. There's no scientific logic behind it, but this is all speculation and a thought process and just a view of the chart. So if the chart follows this pattern, then so one green, three red, one green, I can expect another three red. So August month red, September red, October red, November. This can be one pattern. The second pattern can be, if you see here, this is the second pattern that can also be, is that one green, then July, so August one red, then it may move to two green, one red, then three green, and so on and so forth. So it can move in this way also. Now this is one expectation that is there. This is one expectation, this is one expectation, but all will depend upon how August is forming. I do expect that in the month of August, there should be a pause. There should be a red candle, because that will then give the direction for the next couple of months. Now let's go to the weekly chart. In the weekly chart, this is the past analysis. So one red, one green, one red, one green, one red, two green. Now it can also be that we can have one red and two red. So there can be two weekly reds and then two weekly green, thereby forming one red monthly pattern. So let's see. I mean, it all depends upon how market does on Monday, and then we see how it happens. Okay, but these are just an opinion, just a view from my side. Now, friends, history repeats itself, and chart patterns also repeats itself. So let's see on a daily basis how the chart has moved. Now, on the top side, now this side I have plotted the chart on a 5-minute candle of 26th, 27th, 28th, and 29th of July. So 26th, 27th, gap up, 28th, again gap up, 29th of July. And now let us go back to 12th, 13th, 14th, 15th, and 18th October 2021. Now, don't you see a similarity in these two patterns? If you see if you see here, it's exactly similar. So 12th October, there was this consolidation. There's a long consolidation. And if I shorten this chart, you see here, there's a long consolidation. Then there was a gap up and uptrending gap up, uptrending gap up. Then there was a flattish on the next day, again a flattish on the next day. So what can be expected? I mean, I am not forecasting it. I'm just seeing a chart pattern, please. I'm not focused on it. I'm just seeing a chart pattern. So here, in this day, it can either be flat like this. Again, you can have a flat like this. That is on the 1st of August. Then a gap up, and then again a correction for a little bit. So say 100, 200, 300 points. And this is again my expectation. But history, as I say, repeats itself. Okay. So with this, let us now try to understand how we should trade. For that, I would want to go to my favorite 5-minute chart, and in order to shorten the time, I pre-plotted some of the levels. So what you should do is you should plot the previous day high, the previous day low. Now between the previous day high and the previous day low, that is between 17,172 and 17,018. This is a no trading zone. Please do not trade in between this zone. Kindly do not trade. Doesn't make any sense. Okay. Now, if the market opens flat, the probability of which is quite low, but anything can happen in the market. Let's say the market opens flat, but the market is supreme. But if it opens flat and starts going up, allow it to cross the psychological level of 17,200. Any round number level is always a psychological level. Let it cross. If it opens flat, let it cross the psychological level. And once it crosses the 17,200 on a 15-minute candle, I repeat, on a 15-minute candle, if it crosses 17,200 and closes above that, in that case, you can take a call. You can consider taking a call with a target of 17,377. This is the first target I will see. And if it crosses 17,377, then the next target I see 17,426. Now, friends, I pause here and I want to also show you one long-term trend line, which you should also draw on a daily basis. Now, if you see on a daily chart, the market is moving on a trend line, and which is, if you see the high of 19th of October, the high, it took a rejection from here. The high of 18th of Jan took a rejection from here. The high of 4th of April then took a rejection from here. So in all probabilities, and I repeat, in all probabilities, once it touches the high of this channel, it may also take a rejection. So be prepared for that. I'm only preparing you for that in the future. Keep this channel drawn. So let's go back to the 5-minute chart again. I reset my chart so that the things are visible. Just give me a minute. Here. So as I said, it opens flat on a 15-minute candle. Wait, crosses 17,200, closes above that. You can consider taking a call with a target of 17,377 and the next target of 17,426. Now, if it opens in between 17,250, remember this point, 17,250 and 17,157, in between this level, if it opens, then my previous analysis continues. Wait for some time, and then you can take a call, consider taking a call. The moment you take a call at anywhere here above this line, this particular previous day high should be your SL. If it comes below this, please close the trade. Okay. Now, what happens if it opens in this zone? Okay. Between 17,250 and 17,320. So that's a gap up more than 100 points opening. If it opens between this zone, then what happens? So here, what I would want you to do is, now I will just put this particular pattern out here. I'm just putting this particular pattern out here. So if I've copied this pattern and I put it here. Now, if the market is showing you the same pattern, it is moving in a range within this zone of 17,320 and 17,250, in a very smaller 70, 80 point zone, then at or after 1 o'clock, between at or after 1 o'clock, observe the market. If it is again breaking this 320 and going up, you can consider taking a call with the same target of 17,377 and 17,420. But in that case, your SL should be 17,320. Okay. So if the market is behaving like this, it is within this range or stuck in a range, and after 1 o'clock, it is crossing 17,320 and going up, then you can consider taking a call with a very small target of 17,377 and next target is 17,426. In that case, your SL should be 17,320. And friends, if after this it is coming down, it is breaking 17,250 and is coming down, or I would rather say that at this point, I mean during this period, draw the top, draw this range. At what range the market is moving? It may not move in exactly the same range, but it will move in some. This is just an indicative range. Draw that range. When that range breaks on the downside, and repeat, when the range breaks on the downside, keep a 20-point SL. Keep a 20-point SL, and you can take a put by keeping a 20-point SL. As I repeat, you can take a put by keeping a 20-point SL with a target of 60, 70, 80 points on the downside. Now, since the market is moving from low to high, remember friends, when the market moves from low to high and you're taking a put, you're going against the market. When you're going against the market, as my Guruji says, never put all your eggs in that basket. Put only 30% of your capital, trade with only 30% of the capital. If you are taking normally 100 trades, take only, if you're taking 100 lots, take only 30 lots. If you're taking 10 lots, take only 3 lots. Okay, because you're going against the market. Clear? Now, what happens if it opens flat and starts coming down? As I said, this is a no trading zone. If it is going crossing, and I repeat, crossing, not closing, and if I repeat crossing, if it's crossing below 17,018, you can confidently take a put with again a 70-80 points target. The first target I should say is 16,870. It can take a pause here also, but I don't think it will stop here. It can take a small target 16,870, and if this also crosses, it will go to 16,750. But this is a scenario which, let's say, but I'm not expecting the scenario, but you know the market is supreme. So if it opens flat, comes below 17,018, you can take a put as it crosses this with a target of 70, 80, 90 points, and then that should be enough for the day. Now, if it opens gap down, that's a very negative scenario for us. Should not open gap down, but if it opens gap down, I would observe the market. I would not trade in that. So that's all from my side, friends. One more thing, my friends. My Guruji has done a fantastic monthly analysis. And his analysis that he has done on the monthly part is out of the world. I will be sharing the link of that analysis in my description box. Please go through it. You will learn a lot of things. Thank you so much. Sayonara. Bye-bye. Cheers, and have a great week going forward, and have a great profitable trading week going forward. Thank you.